Right, let's make sure, is the recording going, Steve? Okay, it's still rolling here as well. Yep, good. And Steve, if you could answer or just monitor the questions, be grateful. Okay, welcome back everybody to the final, oh my goodness, I can't believe I'm just saying this. Where's time gone? The final part of a 2-day marathon. Just so you know, for those of you who are in England, I know several of you are over in the UK and Europe, Dr. Gary Dayton is now going to be flying into the United Kingdom. And he'll be there for 2 days. In fact, he's going to be there for a week and a half, actually. But for 2 days, he'll be at the 3Ws event that we're doing. Well, it's not 3Ws. It's a Trade Guider event we're doing in Heathrow with Philip Friston. And you've never met Philip before, have you? So that'll be good. Well, if you're both in your tennis rackets, if we don't see any decent trade setups, you can start playing tennis to entertain the crowd. Definitely. And hopefully if that... Philip, can you just asking Philip the question, can you confirm, is that Wimbledon week that week? I don't know if it is, Philip, but maybe you could confirm that. Okay, so a couple of very quick things. I've had lots of questions about the Weiss wave, the end-of-day scanner, and we can't answer them all. I'd be sitting here for about 3 hours trying to answer all the questions. Now, the good news is one of our customers is actually, who's here today, is joining the Trade Guider team as a consultant. His name is Ken Yee. He's sitting in the back there. Welcome, Ken. He's now officially part of Trade Guider. He's even got his own Trade Guider email, ken@tradeguider.com. And again, I'm a big believer in the law of attraction. Things happen for a reason. And we were looking for a certain individual a few months ago, and Richard and I described that person. And when I met Ken yesterday, and in fact the day before yesterday, we found the right guy. So always remember, be very careful what you ask for, good and bad, because we have found a good guy. So anyway, if you've got questions about the Weiss wave, you've got questions about Trade Guide or anything like that, Ken's email, and he's going to be available from tomorrow, is literally Ken, this is a real easy one to remember, ken@tradeguider.com, and he'll be very happy to help you. Okay, so JP Morgan. Now, this is a stock that I specialize in. It's a stock that I've been following for a number of years for various reasons. The main reason is it's highly manipulated. And I'm not going to go into details why I know that, but what I do know is that this stock is very easy, as you'll read in my book. You've probably seen in my book some of these images, but I'm going to go back over them because right now, in the next few weeks, I think there's a big setup on BP and an even bigger one on this stock. Now, the banking sector has been very heavily sold off. And we know that the markets, especially the S&P, has had fallen. But what I'm looking for is any real accumulation. Now, the news, can anyone tell me what happened to JP Morgan Chase a few weeks ago? What was the news? Anyone remember? Think of Jamie Dimon. Sorry? That's all you remember, isn't it? They didn't tell you they made $5 billion in the same... That's right. Okay, and that's great. You're absolutely right, Paul. Paul from Hawaii here said, Gavin, they lost. They reported that it had to be someone out of London, didn't it? They couldn't blame an American. It was a London trader that lost the money. A typical British. It wasn't anyone in America. No, we're too clever. No, the London office lost the money. That was great, wasn't it? And that particular trader had been with JP Morgan. I won't mention her name, but been with JP Morgan 30 years. Now, what they were doing, they were hedging on some very risky deals. But what they didn't report, which I find it quite amusing, yeah, we lost $2 billion. Okay. Do you know how much JP Morgan made the quarter before? And even here, look, in this quarter here, this is in 2010, $3.3 billion profit. Now, would you say that's pretty good news? Would you say losing $2 billion potentially is pretty bad news? Do you think the stock might plummet on that news? Do you think we could buy it at lower prices on that news? Probably, but we have to use the chart as evidence. And let me be very clear. Someone said to me, Gavin, so what you're telling me, what you're teaching me, is every time I see good news on a stock and it goes up, I should sell it. And every time I see bad news and the stock falls, I should buy it. No. No, no, and no. What I'm saying and suggesting you do is watch the news as I do. Take a contrarian view. Then go to your charts. Tom Williams, when he first taught me, put his hand on my shoulder, he looked at me in the eye, he said, Gavin, the chart doesn't lie. Now the chart and I know David would echo this, is a language, isn't it, David? It's almost like French and German and Spanish. It's a language that talks to you, and you've got to interpret that chart, as Wyckoff told us, second by second, moment by moment, hour by hour, whatever your strategy is. I'm always asked, again, a lot of people say, but what's the best time frame to trade, Gavin? What time frame do you want to pick? I mean, David's been showing you charts that don't relate to time frames. They don't need to, because the market is an unfolding animal, a beast that goes up, prices go up, they go down, they go sideways. What we're trying to do as chartists, because that's what this is, think about what this seminar is called. Wyckoff, Weiss, Williams, the art of ticker tape reading for every chartist. And the reason we honour Richard Wyckoff, who's obviously no longer here, is because he's the centerpin of everything that we teach. Without Wyckoff's theory, we wouldn't be sitting here today, and you wouldn't be listening over the internet. And then we've got David's work, where he has 41 years of experience, is here and now, and is moving into the 21st, 22nd centuries. With the aid of computers, supercomputers that we're now working with in Wales, we've got access, and we can do all sorts of things that Wyckoff couldn't do. We can test things that Wyckoff couldn't have tested. But if Wyckoff was here today, I guarantee he'd be using a computer to test his theories. Now, we are getting fairly advanced at TradeGuider right now by putting together David's work and VSA. And one thing I always have a problem with is I'm sent so much information from around the world of the latest great thing, the new big breakthrough, and I get it, and actually usually, I mean 99% of the time, it simply doesn't work. It's based on a mathematical formula. And Tom taught me right at the beginning, he said, Gavin, the market does not like and will never work on mathematical formula, as you know it. The Black-Scholes formula, anybody heard of Black-Scholes? Yeah? There were formulas, I've read the book on that. But some formulas appear to work when a market is in a strong trend. But I read to you in my presentation yesterday that 3,000 funds went out of business. Now, does anyone know why? No one's given me the answers. Why did they all go out of business? No, it wasn't just they lost their money. Their algorithms failed because the market changed behavior. How do I know that? Because I know some top fund managers who went out of business. And I said, do you use volume? No, we never use volume. Several people I've met, they don't use volume. They're using trend. And what was the market in from 2000 to 2006? It had dips, but overall, it was in more of an uptrend than a downtrend. So these algorithms that appear to work, these high-frequency algorithms, many of them work in certain markets. One of the worst things that can happen to a trader that just starts trading is to make a lot of money in the first few months. The worst thing that can happen, and everyone said to me when I said that, don't be stupid. That's great, that gives them confidence. No, it gives them overconfidence. And often the circumstances that they made that money in, unfortunately, may have been a really great trend that they caught, and they've used a MACD and a stochastic with a candlestick, and they've looked at that pattern and said, that is the Holy Grail. And they go and tell their friends, I found the Holy Grail. So their friends apply the Holy Grail just as the market's rolling over and blow their accounts up. Happens so many times. You see, Gary and I teach a lot of people, as do David and Steve. And we've got, I think between the three of us, we've had over 2,000 or 3,000 customers, probably more, that we've actually taught. Many, probably more than that. I wouldn't like to put a number on it. But we often find the same problems with traders is they don't really understand the language of the chart. Now, these last 2 days, we've spent a lot of time on it. But what I want to go into a little bit now is we've talked a lot about chart reading. I'm going to talk a bit about the psychology and the chart. Why is it that the news influences us as human beings? It's because we live in the here and now. And the here and now means that at this moment, you're receiving information. You don't know what's going to happen tomorrow, and you can't change the past. That's a fact. So at the moment, you're receiving information. And the brain is the most complex computer in the universe. Very clever thing. And as it assimilates this information, it forms an opinion and builds an emotional response. Now, we've already talked about the two emotions that drive the markets, fear and greed. But what I've always amazed me, and I never, it took me a time to understand this, but when Tom said, when the news is good, the market gaps up, the volume is ultra high, and the spread is narrow, you must go short. I said, no. Tom, everyone's buying there. Surely, look, I mean, if the profits are good, the fundamentals are good, the trend is up. Come on, if I tick all my boxes. But then the light bulb went off. We're talking about smart money and dumb money. You in this room and listening on the net are now a member of a very small community of traders that are not in the dumb money segment. So let's look at this news here. Now, the news, of course, is very bullish. That is what happened on that day. Now, Trade Guide, and we already know, we've looked at charts, has indicator numbers. And we've all, I think, learned this weekend that supply and demand are moving these markets. Cause and effect are moving this price. Effort versus result. Here, we see a classic example of the effort and the result. And it all happens in 3 bars. And I want you to focus on that bar, and that bar. And finally, that bar, which is a trigger number. So bar 1 there, 2, 3, and 4. This is one of the best short setups in any market that I ever see. And I'm going to explain to you, first of all, in a stock. This is a daily stock for those of you that trade stocks. But let me just, again, this is going to sound somewhat confusing for those that are new. But if you trade Forex, where there's no volume available, apparently, this setup works great, many times. One of my favorite for trading the euro and the pound is this setup that you see. Because when the banks come out and there's news, this is exactly what they do to catch all the uninformed traders. They mark the price up, mark it straight back down, catch you out, and then lock you into poor positions. Ken, how many times have it happened to you? Not anymore because you understand VSA, but that's exactly what happens. When you see a rising price, I remember you talking to me yesterday, you used to want to chase that price because it's going up. That's totally logical, isn't it? But it's going up. My MACD says it's going up. My stochastic says it's going up, and there's big volume. I better get long. And actually, you might get long and get very yucky, and it goes up further. And then you might even add to your position. But my goodness, now you read volume, you might be looking very closely at the signal and saying, at what point do I get out? Have I got onto a long position on a 1-minute chart as the hourly chart was building up to the big climactic bar? Yes, I'm long as they're marking the price up. Hey, it's like surfing a wave in Hawaii. I jump on and see how far I can get before I fall off the board. And I use something called a trailing stop. How many of you use trailing stops? Can I just ask the audience out there? How many of you in the internet use something called a trailing or a chandelier stop? A chandelier stop. For those of you that have got Trade Guider, okay, I don't think a lot of people will actually know this, but I'll put the euro is going to take off tomorrow, by the way. Just be ready for a big trade on the euro. They've just announced a new story just came out. Let's have a look at the Aussie dollar. Let's go for the... it is. It's going to... Oh, you wait. We'll be looking at it. Don't worry about that. We'll be looking at it. Something's going to happen. Okay, now, you see these H stops in Trade Guider here. There's another thing in Trade Guider that you probably aren't aware of. And for those of you with the software, if you hit Control U, it brings up a magical line. This is called a chandelier stop. Now, you haven't got this in the plugin. So if you've got a TradeStation plugin, a Ninja plugin, you don't have this. And I don't think we can put it in. But what this is a chandelier stop that shows you where you put your stop. Now, what happens is, as the market's unfolding, the rules that I use to go long, here's a good example, is the diamonds, I must have more green diamonds than white diamonds or red diamonds behind me. In this instance, it's a 5-minute chart of the Aussie. But what I do, if this was live now, I'd be looking at my scanner that runs live here to ensure that at least 3 of these time frames are all aligning. And I can pick which ones I want to trade. If I want to scalp the 135, I need to see alignment. If I want to swing trade, I'm not even going to look at that. I'm going to look at the hourly, the 30, maybe the 4-hour chart. If I'm going to hold a position overnight, which I do in currencies. Okay, I do trade the currencies, and I will trade into the night time because I'm usually up watching it. I keep very odd hours, as my wife will tell you. But The chandelier stop, once you're in the trade, allows you to move your stop in harmony with price. What's the benefit of that? At some point, you're at break even. And at some point, if you've got it right and you've read the chart correctly, you're going to start to get into profit. Once I'm in profit on the trading dome that I use for trading futures, I have a system in there that can allow me to preset a target that every time the market moves up 12 ticks, my stop goes up 3. It goes up another 12 ticks. As soon as it gets to that 12 ticks, another 3. So each time I'm giving the market room to breathe. Why have I got such a fast stop in the market? I trade less size, bigger stop, so I don't get stopped out. I don't trade bigger size, smaller stop, which is what most retail traders do. They trade with a much too close a stop to the market. They get stopped out, and they're trading far too big a size for their account. As a rule, you should not trade more than 2%, maximum 2.5% of your capital account in any one position, with a maximum of 6% if you're trading more than one position, if you're trading 4 or 5. Gary, would that be acceptable? David, would you agree with that risk assessment? Okay, Steve? And we all do this. We're not going to put all our money. I mean, I will say this. Tom Williams once came up with a classic. He said, I don't agree with Gav there. And I'm like, oh, no. You know, here's the guy that taught me. No, he said, if you see end of a rising market, yeah, he said, mortgage the house, sell the car, sell the kids, put it all in the market. And he actually meant it. And I said, you can't teach that. You don't ever do that. And then he backed down. But when you see a position to enter in, the trailing stop, the chandelier stop, and if you put the H stops in as well in Trade Guider, the H stops, you'll notice, will actually also trail the chandelier. So you get multiple confirmation. Why do I like trading currencies, you might ask? Because they trend. They're the best trending things that, they trend beautifully. And they're also very closely aligned with gold and with the S&P. So I can look at my gold and oil charts, my commodity charts. This is subject to a completely another event because we did a seminar called the Commodity Seminar where you look at gold and oil and then you look at the stock market. Sometimes they correlate, which is usually unusual. But often, if the gold price is going down, we should start to see a higher price in the stock market. But at the moment, they're actually doing some strange things, which leads me to believe there's a big move coming. I don't like what I'm seeing, but it does. When I say I don't like it, I know there's something coming. I think the euro is being set up. I think most of us, how many of you, let me ask on the web, think the euro will be disbanded in the next 12 weeks? In the next 12 weeks, we will have no euro currency. Can you just see it in there? Yes or no is the answer. How many of you here believe within 12 weeks, we will no longer have a euro currency in Europe? The truth is, we don't know. There's no one knows. And if anyone had said, yeah, it's an opinion, we don't know. What we do know is the media are hyping the hell out of it. But usually, if we all think no, we're going to have a losing euro, we're going to lose the euro in 12 weeks. We can't put a time on it. But if everyone's thinking, no, they're going to save it. You don't know. But what we don't care, do we? Because we can't change it. I always believe if you can't change something yourself, don't worry about it. Change what you can change. So when we see very high volume coming in like this, there's something that maybe with VSA you may not have understood, but I'll try and repeat this. It doesn't look at 1 bar. It looks at 3 bars and 2 bars. Minimum 2 bars. There is only a few signals that look at 1 bar. Very few. The majority look at least 2 bars, as we see here. Now, observe bar here, which has got the supply coming in. The news is good, the price gap's up. But that doesn't tell me if that's absorption volume or not, does it? Because if they're going to absorb sellers to the left, I should see a test almost immediately. Now, you might want to write this down because you'll never have heard this before. If you see ultra-high volume on an up bar and you see a test within 5 bars, definitely don't go short and wait. Because I got caught in a trade on the NASDAQ twice last week where the same thing happened, where it looked weak, there was definitely high volume, but as soon as I took my trade, I was testing something as myself, Within 5 bars, we immediately saw a no supply or a test bar, and then the market went sideways for about 8, 9 bars, and then it took off again. That's telling me that the market's bullish. If it doesn't come down and start to change trends, certainly within 10 bars, this isn't any time frame. You really want to be careful with your short. This is where you short the market. You see the next bar here is level, but look at what do you notice, everyone, about the spread of that bar compared to the range of the bar behind it? Yeah, and where does it close? Bang in the middle. Yeah, almost level with the next bar. Now those 2 bars tell me, are you going, Richard? Well, you better come and say goodbye to the crowd here. Hold on. Hold on, my business partner Richard would like to say goodbye to everybody. He's now travelling back to England, so say goodbye to everyone.
Head of confusion here. Yes, I hope the rest of it goes well. Pleased that you've all got something out of it, and I'll leave you back in Gavin's capable hands and onto the airplane.
Okay, so we see supply entering the market, but here is my favourite bar of all. Will anyone tell me what that's called? The gotcha bar. It's a great bar. And what it does is it catches all the longs by complete surprise. Now, Tom said to me the market's devious. This is about as devious as it gets. Every trader, or shall I call every sucker that got long here, now sees a rapidly falling price. Now, when you're in a losing trade, what's the one thing you wish for? Turn around, right? I'm going to make profit. And this is what they do. The next day, we have a level bar. And then it goes up. But look at the volume. See? There's no interest. Now, people who don't read volume would take no, well, they wouldn't understand what that is. They just see the price going back up. So they're like, whew, that was a close one. It's going back up. It's going back in my favour. I'm going to get to break even. I'm going to make money. They talk themselves into what is not going to happen. The market does not listen to you. Trust me. It's going to do what it's going to do, whatever you think about it. And what happens then? We go up, and then it comes down again, and now people are confused. Worst of all, it then goes sideways, and there's another gotcha bar, look. Bang. So now they've got you down at this point. Either you're panicked out of your trade completely, which you should be reversing it, or you're going to hold on for dear life because you say, look, this can't be right. The news is good. You go back to the news. You say, hold on, the fundamentals are good. The news is good. My MACD was going up. Something's wrong. This must go up. But then here is our old friend. No demand. An up bar. The volume is now, this is an exact definition, if you want it, of no demand. No demand should have the following characteristics. Number 1, you should have a serious sign of weakness in the background. Do you all agree we have a serious sign of weakness in the background? Yes or no? Anyone think we haven't? Does anyone on the internet think we haven't? Do you all agree on the internet there that this is a serious sign of weakness based on what you've learned this weekend? Okay. Second, we should see a change of behavior in the market. Do you think that gotcha bar is an immediate change in behavior or an increase in volume? Yes or no? Is that a change in behavior? A markdown on massive volume? It's not continuing its trend up, is it? That's definitely a change in behavior. Now, why here do you think that is not a sign of strength? Think about it. Is it defining VSA? This is where people get really confused. They say, hold on a minute, Gavin, high volume, ultra high volume, down bar, got to be strength. But in this instance, it's actually a very weak bar. Does anyone know why? Well done. Top man. Excellent answer. Because what's happened here, you've been in an uptrend behind you, not a downtrend. If that was in a downtrend, and the downtrend had been in place, I'm all over it as a potential buy. But after a period of rising prices, this is a trap up move. It is not a sign of strength. And that's why it's got no signal on it. Because the software looks at that with a particular rule and says, do not put a green signal on it. Sometimes you'll actually get a red signal on there called trap up move. But the reason it didn't actually come in here is because, I can tell you one of the signals here, is because that bar didn't go higher up here. If that bar had closed up here, or had started its journey up here and then gone down there, that would be a trap up move as a signal. But I can tell you that that is a gotcha bar. And I'm writing a signal specifically for this setup, which will actually scan 20 bars for that entry right there in any time frame. And this is going to be in the hedge fund software. And this is as a stronger setup as you'll get. So here we have a signal called no demand, which is as follows: weakness in the background, a change of behavior, which means I define a change of behavior by making at least 2 lower highs on the bar. So a change of behavior for me is making 2 lower highs after an uptrend. It's the complete opposite when you've had a downtrend. So this is after an uptrend, I've got a serious sign of weakness, I've made 2 lower highs. Then I'm looking for my first recovery in the market on reducing volume. Here, here, and here. Let me just be pedantic so you can all see it. So I'm looking for my recovery after my weakness on reducing volume, which we can see there. Okay, so the market's trying to go up, the volume's going down. Now, if we look at this in the Weiss wave, which we will, you're going to see it confirms it 100%. It has to. It's based on the same theory. But what's going to happen? David's going to give you the wave count, and we're going to give you the indicator. So you've got 2 strong confirmation techniques, that one confirming the other. What does every trader want? The Holy Grail. You're not going to get that. The Holy Grail is, you've got it. It's in your head. So the next best thing is what we call confirmation, or multiple confirmation, and that's what this is all about. So does everyone understand that setup before I move on? Any questions about that? Because that's a very strong VSA setup. Any questions? Yes or no in the internet? Do you all understand what I've shown you there? Hopefully you do, because after this is why I wanted to do this at the end and not at the beginning, so you can understand here that supply has overcome demand at point A, we have a change of behavior here at B, and we have an entry to enter the market at C. I'm learning from you, Steve. Is that any good? Do I get mark out of 10 for that? Yeah. Okay, good. Now, when we see something like that in the market, everyone tells me the market's random. Markets, Gavin, are completely random. I said, no, they're not. They're absolutely specifically moved to points. And here's a good example. The same thing. Yeah. Oh, yes. Yeah, there's very good. Who asked that? Michael, good question. The question is, if you see your no demand bar, do you buy it or do you short at the market, or do you put an order in one tick below the no demand bar? What do you all think? Yeah, now here's a question I often get asked. They say, Gavin, hold on a second. What happens if the market goes down, takes you in, and then closes higher than the no demand bar? Damn, I got it wrong. Really, the safest answer, and I have to admit I don't always follow this, is to wait for the next bar to close. Because remember, no demand requires confirmation. Okay, so if you read the dialog box, let's see if I can show you one. I don't know if I can find one quickly here, but let's try and show you one here. That must be no demand. Okay, so read the dialog box because it does help you. Can everybody see what that says? Philip Friston, who's here today, he's a fund manager in England, together with Tom Williams, revamped all these indicators to give you more information. I'm amazed. I speak to a lot of customers who never even open the box. They just look at the indicator. I'm at a loss to why people don't do it. I mean, that's the most important part of what we are as a company. It's the intellectual property that we so jealously protect, because it says there, no demand should be confirmed when the next bar, as we saw there, closes lower. And of course, you know, we see, quite frankly, that that's exactly what happens here. There's your no demand, and we close lower. But guess what? If we miss that, we get another no demand bar straight afterwards. These are great shorts. If you just look for the following setup, based on this principle I'm showing you here, and you use the Weiss wave over the top of it, you know where to go short. This is where you go short. So, did that happen again? Exactly the same. Can you all see the date there? Can you see that up there? 14th of October, 6 months earlier, yeah? What do we notice about this bar? This is a classic end of a rising market signal, actually. Massive volume. In fact, it's shown here as very high in the software, but I can eyeball that and see that's ultra high. Narrow spread, closed in the middle, next bar closed actually slightly lower. That was a test that failed. When does a green signal become a sign of weakness? When it fails. So does a green test become a weak signal when it fails? Yeah, especially when you have an immediate sign of weakness behind you. See, that's a test. Sometimes a test will succeed and go further, which can be bullish, but I have never seen an end of a rising market signal get successfully tested in 10 years of doing this. Never seen it. Especially that one there, this is, forget what the dialogue box, I think the dialogue box was telling us supply coming, but that is, I can tell you, an exact end of a rising market. If you want to write down the definition, this is what the end of a rising market is. Number one, you should have had a bull run behind you, a series of rising prices, not falling prices, for this to be a really good setup. Number two, market should gap up. That it should. It doesn't always, though. It doesn't have to, but it should gap up. Number three, the volume should be excessively Yao Ming, ultra high. In fact, you should look back maybe 100 to 200 bars, and this thing is jumping out at you like a sore thumb. Number four, probably the most important thing, the range or spread must be narrow. That is the key to it. Something is capping the market, and only one thing can do that. Smart money selling into the herd buying. And when that happens, that market is going to take a serious decline. Often, I'd say 90% of the time I see these in stocks, the news will be good, not bad, as I've shown you twice here. And the result is always a decline in price. Most traders that I know that have never used volume, when I show them these charts, say, why didn't I find that 20 years ago, Gavin? Why has no one told me that? David, do you ever have people say that to you that have used technical analysis and suddenly you start showing them volume and they say, why does no one teach this? It's so... Most people, David just said, most people don't even believe volume works. I've read, yeah, I think it's ridiculous too. I mean, I've read an article in an FX magazine that absolutely tried to destroy the fact that there was no volume in Forex, so it can't work. So what, and they actually had a poke at trade guider. And so I said, well, look, if that is true, how could it possibly be that I can bring up Forex charts of the euro and the pound, say, or let's go to euro or US dollar, and I can actually bring up charts with volume in Forex with great signals on them. If that statement was true, how come we can trade the spot Forex market? Ken trades spot Forex. You get volume. Yeah, now, tick volume works the same. Why does tick volume work? Because it's activity. That's all we're interested in. And what we get from many data providers now is tick volume from the Forex market. Now, I'm not going to go into that in any detail now, but trust me, that is a Forex chart. It's a Euro USD spot Forex chart with volume with great signals on it. Look, bottom of the trend channel, look at the healthy increase in volume. You see, as the market falls, we see the nice increase in volume, just like Gary was showing you. And there's a signal underneath it, two of them, in fact. But it's in the right place. It's right at the bottom of my trend channel that's been in place here for absolutely, well, it's been in place for about 3 or 4 months, longer than that. It went back to last year. Notice how it came up to the top of my trend channel, and it's now right at the center line here. And guess what? That's going to be very important. We're right in the middle of a downtrend channel. Dead on it. And it just happens, they just announced that Spain has been bailed out for 100 billion. Well, it's not a bailout. I can't work out the difference. They give Spain 100 billion. That's not a bailout. They give Greece, they give it a few billion, so that's a bailout. What's the difference? The headline, wasn't it, Gary? We both picked up on this because the currencies are going to move this week. In fact, David and I are going to be trading live together on Tuesday morning. I've got to work out the exact time. We'll email you. I've got to liaise with David. But we're going to be doing live market analysis, and I'm going to trade what I see. And hopefully we'll get some move. Now, if I don't see a trade, I don't take a trade. It's as simple as that. So when we see these principles, they're going to be right in front of your eyes. And I hope, as I did, it took me time. I know this sounds odd, but every time I see a principle now, a little voice in the back of my head says, you know it's there. And where it all really started for me was in New York at the Traders Expo. I did the Traders Challenge, which is a competition. They take one trader or two traders from around, it's the world. I was up against an American guy, and it was a competition. You had 90 minutes to make money. That's pretty much it. Now, you don't know what the market's going to do in 90 minutes, but I'll never forget it. I've written about it in my book. It was the NASDAQ. I sat there for an hour. Nothing happened. But I did see a shakeout in the background. And I knew, I said, well, if I see a test or a test in a rising market, I have to go long here. And literally with 20 minutes to go in the competition, and I needed to make some money and win, right on there on a 3-minute chart, there it was, test in a rising market with a shakeout in the background. What more do you want? I had no choice. I'm in. No hesitation, because the little voice said, if you don't take that trade, you're an idiot. And now, that's how I think. I make sure that I have justification based on my trading plan to get into the market. And everything is very structured. Climactic action in the background, is it up or down? If it's up and the market's being distributed, I'm going to start looking for short trades. I then look for the behavior. Is it in a downtrend in 3 time frames? Yes, it is. Now I'm looking for my first point of entry. It could be an upthrust. It could be no demand. Now, here's the problem with that I had originally. Tom said, right, well, you can go short on an upthrust on high volume, and you can go short on no demand on no volume. I said, but that doesn't make sense, Tom. I can't go short on both. He said, yeah, you can. And he's right. Because if it's an upthrust, they're marking it up to catch stops deliberately. And if it's no demand, professionals are just telling you the market's trying to go up. The market maker's probably pushing it up. They're not taking any active participation in the rising price. Nor should you. You should short it. So these signals are very, very powerful. Here's another example, same stock that we're going to look at when we get the TradeStation chart up. Again, here we have very high volume. Now, can you all tell me what you observe after that signal, what happens within 5 bars? Okay, so this is the signal I'm referring to where the arrow is. What did I just mention? You've got to be very careful of after you see a sign of weakness. No. I definitely said it, didn't I? If you see something after a sign of weakness, you don't want to short it. What do you see with it? There it is. There it is. Test. Right there. And what happens to price? It moves sideways for several bars. It goes up another leg. Signal isn't wrong, as I'm going to show you. They marked it up further. They actually marked it up to its resistance level, as you're going to see. This is serious resistance on JP Morgan. And I think we're going to get up there again. At the moment, though, on JPM, we're at really good support price, at a really good support line. But I wouldn't buy yet, as I'm going to show you. So when you see a test, and also the trend, the market did not change its behavior in this example. The news was good. The signal was there, and I was very tempted to just short it. But I remembered my rule, and I waited. I want to see the gotcha bar, the change in behavior or something. It didn't change. It didn't change for 4 or 5 weeks. It did change. But this time, unlike the other 2 examples, which only took a week to change behavior, this thing took 7 weeks. I still managed to short it, as you're going to see, because I saw a test here immediately after, within 5 bars, in fact. There you go. Look, 1, 2, 3, 4, 5. On the 5th bar, the test came in. There's no rule, by the way. Someone said, is that mathematical, the 5? No, it could be 6, and it could be 3, because you cannot apply a mathematical formula, which is why pilots, doctors, sometimes accountants find it very difficult to start trading, because I met a pilot, really nice guy. I was traveling with my son back to England, and it was there with my wife, my son, and we were traveling back, and I got a steward come up to me and said, "Oh, are you Gavin Holmes?" I'm like, "Yeah." He said, "Well, could you go down to the front? The pilot wants to talk to you." I thought, my goodness, they're going to throw me off. I haven't even had a drink yet. I'm in trouble now. I went down. It was one of our customers. I recognised him from the seminar, and we got chatting away, and he very kind guy, name's Rob. He said, why do I find it so difficult? He said, it can't be that difficult to make money in the market. He said, the market only does three things, doesn't it, Gavin? It goes up, it goes down, it goes sideways. He said, I always get it wrong. He said, I don't get it. I said, Rob, I said, when you're taught to fly an aircraft, I said, when they give you the manual to read, do they put little tricks in there so it says when the throttle you say go forward, you should go back? He said, well, don't be stupid. No, he said, the manual, we'd crash if we use that. I said, so what you're telling me is the information in that manual has to be 100% correct. He said, don't be stupid, Gavin. Of course it is. We all use it and we refine the manual. It's 100% correct. I said, so you're looking for 100% certainty in the market? And he looked at me, he went, well, yeah. He said, I do my fundamentals. I watch the news. And I began to smile. I said, now, here's the thing. You know that your simulator that you're flying in, your manual, is 100% right and you trust it with everything you've got. He said, that's right. I said, now, when you see stuff about the market coming in at you, you probably feel the same way. You probably think the information's good. And he sort of nodded. He said, well, yeah. He said, I used to think that until I lost X amount of money. I said, that's exactly what the market is. It's devious. And Tom taught me that. It's devious because the information you're receiving, they're not lying to you. I'm not saying that the media are out to get you. Far from it. They don't know any different. And it's called the halo. Have you heard of the halo effect? Tom described this to me. He said, Gavin, do you ever watch the financial news? And I used to, when I first met Tom, the first thing I would do now, because I was really interested in the market, was go and watch the financial channel. And lo and behold, I got here to America, and they'd suddenly, Fox News or CNBC, they'd say, right, we're going down to the floor now, and Bethany's on the floor. She's talking directly to the traders right now. And so the traders would then come up and they'd say, what's happening today with Apple? Apple's looking very, very weak today. Terrible. We're all shorting Apple. She said, well, they're all saying Apple's looking bad. And 3 days later, Apple goes up. So Tom said, well, the halo effect is when you're on television and you're being broadcast to everyone, whether you're an expert or not, you are perceived as one. And some experts are great, but be very careful. Jim Cramer made the absolute big mistake of saying Bear Stearns was absolutely fine a few weeks before the whole thing went out of business. I don't think he meant to say what he said, I might add. But because it's on TV or it's in the financial papers does not mean that it's going to help you. And I'll give you a classic example. Jim Cramer actually came on YouTube and did a video where he talked about manipulating the market. How many of you have seen that video? Yes or no? If you haven't, you really should see it. You must see that video if you're a trader. I've got it on here at the end if you want to come and have a look, because I think they've removed it from YouTube. What he says in that video is very important to the way the markets work. And by the way, I'm a fan of Jim Cramer. I'm not knocking him at all. He said, if I wanted to get a stock like RIM and I needed it down because I wanted to buy more, I'd ring the bozo reporter. And he actually named the reporter that I won't name. Remember this? I call the bozo reporter and I'll feed him a line that whatever it is, RIM or whatever stock he was after, is in trouble. And I'd start putting a few sells in the options market to make it look like it's going to come down. And I'd show that to the reporter. The next day, he'd report some serious news about this, blah, 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 and the stock would drop a bit, and the options market would help him. And he said it only took him $10 to $20 million to do this. And at that point, when he wanted to buy it back, he'd rush in and buy it. And he called it fermenting. Fermenting. And he said it's blatantly illegal, but, I do it anyway. He said, because there's a hedge fund that's in trouble, and you want to make money, this is the sort of thing you've got to do. Well, think about that. He was saying that I was giving the information to the newspaper to print something so it would infer a stock will move, when in fact it might move the opposite way, which it did in fact in that example. That was the first YouTube video I ever did. It's had like 58,000 views now, where I picked up on it and said, no, Mr. Cramer, what he said, this is the chart. And lo and behold, the chart picked it up perfectly. So when we hear news that infers something's going to happen, such as gold is a great buy, such as stocks are a great sell right now, look at the charts. They never lie to you. If the volume's there and you see the professionals moving in, you have an opportunity. Now here on that example, there is no demand at market top. It's confirmed on the next bar, and the stock plummets. And there's a great short setup as this stock plummeted. Notice as a stock falls how it goes up on low volume consistently. Notice this here, low volume, low volume. These are great places to identify a weak stock. Now, where you're going to make a great deal of money, in my opinion, is if we have a bear market that's seriously bearish. It's going to fall quickly, like in 2009, and running into the, the Lehman crisis, 2008 into 2009, because fear sets in, and you'll get these signals on multiple time frames. Were you trading around that day that Lehman Brothers, they announced they were going out of business? I was very lucky. I was very lucky myself because I closed out positions and I was long. Yeah, I was on the wrong side, so I was very lucky I got out but I didn't know. I didn't have. I had any information. I didn't. I just closed my positions out, and luckily for me, I didn't lose any money on that. But here we can see a prior resistance level here. This is the bar I showed you on the previous chart. Look. Okay, so let's go back. There's your supply coming in. Look, in January. Oops. So there's the news. There's the supply coming in here. It gets tested. It goes up. Then there's no demand at a prior level of resistance. And then look, they distribute the stock from here. Weakness, weakness, weakness. It still tries to poke up to catch anyone long, collapses. And notice the no demand bar appears exactly at the top of the very high supply bar. That's called no demand at previous supply. Sometimes it happens within 20 bars, 10 bars. In this instance, it took nearly, from February through till May for the behavior to change. This is why I use the diamonds, because you'll notice, oh, sorry about that. Oops, let's go back. There it is. Here, you'll notice that the diamonds in the Trade Guider program start to sense the behavior, the change of behavior here. 1, 2, 3, 4, 5, 6, 7 red diamonds. There's my first red signal. The bars have changed red, the diamonds have changed red, and I've got weakness here. So I've got this here, once it's breached, becomes here where it became, yeah, exactly, it now becomes serious resistance, exactly right. And you've got no demand at prior resistance. It's a great chart. And there's plenty, and that's why I love this stock. This happens consistently. And what they do, they bring it back down to $25, $30. That's where they buy it back. I haven't got examples of strength on this chart, but I can show you when we get to David's charts and Gary's charts. Okay, another example, last year. Same stock. I'm not going to, this is not in my book, but you'll see this. I saw this. The market was in a lovely downtrend. Now, again, look at these bars here, here, and then this bar here. It's the highest volume that we saw. But again, we look at the date here, 14th of July. JP Morgan profits beat market expectations. I mean, you've got to keep laughing at this stuff. But, the market shoots up. Okay, it closes higher than the previous day. The volume's massive. The herd rush in and buy. They're interacting because they think that, and this is not like it hadn't happened 3 times before. But do people forget? So if they got stung 6 months earlier, they forget. But if you can read charts, you can start to see that that is a genuine upthrust. Why? In fact, Trade Guider, you don't see this signal very often, reads that signal as something called supply overcoming demand. And to me, though, that is a very good upthrust because the volume is absolutely enormous. We hit the top of a trend channel that's been in existence from here and here, 2 highs intersecting low. We move up on massive volume. We close on the low. Next bar closes lower. That is an upthrust in a downtrend. That is a great place to short the market. An upthrust in a downtrend. And there it is. Massive, massive upthrust. And I posted it on YouTube, actually, deliberately, as it happened, the day it happened. And the reason I said that, I said, look, if I'm going to show you that to believe in this principle, I have to go in front of the thousands of people that follow me on YouTube and show them, hey, this is going to fall, despite the news. And sure enough, that's what happened. So the principles, once you believe in them, as I obviously do, and JP Morgan went down and hit $28 where it's found support. So it went from 47 to 28. It's a pretty big, and you only have to take a piece of that, a put option. Good example. I'd love to see what it looks like now because there's some good stuff on that when we look at the Weiss wave. And so signs of strength now. we're going to talk about BP, British Petroleum. Now, this again is a stock that pays dividends, that always used to pay dividends, has just restarted. It trades on two exchanges, the London Stock Exchange and the US Exchange as well. So it's traded on the New York Stock Exchange and London, but they both work in the same way. The news, of course, was absolutely horrible in 2010, and we now know, of course, that the BP stock collapsed in price. On the day that they said we can't cap the well was the day that the buying came in massively. Not selling, buying. Now, because when you try and show this to people, even after the event, they have trouble believing you. Because think about what I just said. We can't cap the well, the news is bad, and someone's buying. That doesn't make sense, does it? Because you'd think there it's the opposite at the top. Professional money here have seen an opportunity to buy a perfectly good stock. BP were one of the top 5, Gary, companies in the world, top 10, certainly top 10 for turnover. They're in every country, most countries. And also, as far as I'm concerned, we're going to be using petrol and oil at least for the rest of my lifetime. So, and they are one of the big providers, so they're going nowhere. And then we look for Yao Ming on the chart, and there is Yao Ming. And you'll find Yao Ming appears on the same day, as we can see there, that they said we couldn't cap the well. That's a fact. And once you see this stuff, and what I love, shall I tell you what I really like about that bar, was the next day. That's when Tom rang me. Tom Williams rang me in Chicago, and he said, Gav, I was doing a seminar actually at MIT in Boston a few weeks later. He said, Gavin, he said, I think my signal might be wrong. He actually, for the first time I ever met him, he doubted his own signal, which was amazing. He said, I think there's something wrong. He said, I think they're buying BP. And actually, I have to admit, I had trouble with that. As much as the time you want to believe in your principles, I had trouble with that. I said, there's no way anyone's buying BP with all this news, because we don't know what the liability was going to be for the Gulf of Oil. We do now. Nowhere near what they said. So, but what we like about that bar is the behaviour of the market and how it changes. This is a change in behaviour on bad news. This is exactly what happened on September the 16th, 2001. That was just after 9/11. This is exactly what the chart looked like. And when the reason I got involved with this business when I first met Tom was he showed me the chart of that. And he said, what happened to the market after 9/11? I said, it tanked, collapsed, kept going. He said, no, it became a bull market. It took a while, but it took a bull market, 5-6 weeks, and then it did eventually fall further. But there was enough buying on September the 16th when the market opened. And it took a time to accumulate, but again, prices were attractive to smart money. Here, BP was attractive. But look at the setup here. Look at the high volume. We come back down into that area. The volume gets lighter. There's still so much supply around, though, it comes down even further, which is why I don't like to trade against these diamonds. These diamonds are my guide at all times because they're telling me the market hasn't changed behavior yet. So we have no supply. Then we begin to try to change behavior here. But that is the entry. Why? Because it's taken out the top of this bar. Make sense? Gary's nodding his head. I mean, we're all looking at this. It's the same, but it's just a different way. It's the same way, but I'm using VSA, you're using Wyckoff. It has to all be the same because it's all interconnected. So what happens? We have a selling climax. It's a bit like a shakeout. They do the same thing. This is professional money rushing in. This is the UK stock. So I just showed you the US one. This is on the LSE, the London Stock Exchange. And what we see, of course, is buying, not selling, coming into the market. There is your climactic action. And we notice here, these indicators underneath here, someone was asking about them earlier, they're developed by a guy called Robert Hoffman, who's a professional trader, a friend of mine. He was famous, actually, for making a very big loss, massive loss. I say famous, infamous. But you know something? The guy recovered immediately, and I have to credit him for that. For those of you that know Rob, he has a live trading room, and I met with him a few weeks ago. He's more than happy to tell you about it. I won't tell you the amount. He took a very big hit. And he broke his rules massively. He widened his rules out because he was greedy. Just that day. It doesn't take much. Well, okay, Steve's traded with Rob for a year. He's very consistent, but he uses a system which, if you get it wrong, can cost you a lot of money. And he broke his rules, which is why if he stuck to his rules, he wouldn't have lost anywhere near the amount. And he actually would have made about 5 or 6 grand, is what I saw. I went back and looked at the video. So you've got to understand that these indicators work very well. They're momentum-based, and they're showing us when the market's moving up. But look, here you have a test of all that supply. Here it is. And eventually the market changes behavior and begins its uptrend. Remember, I'm looking now for 2 lower highs. There's the first one. There's a higher lows, beg your pardon. There they are. Higher low, higher low. And I've got in the background strength. Whether the news tells me that's strength or not, I don't care. Well, the news will not be telling you that's strong. The news will be telling you that that is a very weak stock. And again here, all the way up, we get opportunities to buy into the stock. Anyone got any questions on that chart? It's a great chart, I know. I mean, that's why someone said, well, I'm going to use the chart from my book because it's a great chart. And you see this happening all the time. There's some good setups coming right now in a few stocks. Is that bag holding? No. It's climactic action. Bag holding would be like as follows. I'll define bag holding for you. There would be a period of falling prices. That does meet that criteria. Usually you'll get a gap down bar if it's bag holding. Sometimes it doesn't gap, but the best ones are gapping down. The volume should be ultra high or massive Yao Ming bar. The spread should be extremely narrow, and it should close in the middle or the high. It can close on the low. I've never seen one. The ones I see tend to close in the middle or the high. But what makes the bag holding signal strong is the narrow spread of the bar. That's what makes it strong. And the ultra high volume. Yes, Paul. Will it be tested? Paul asks, will that be tested? Almost definitely. But the fun that we're doing back testing on that signal at the moment. And we've got some very strange results because actually probably about 50% of the time they're never tested. They just go straight up. Not even a test. Just bang, bounces off. Because there's so much buying, they're not going to test it because they've seen an opportunity. We don't need to test. We've got rid of all the floating supply. We're now bullish. We're just going to mark this up. It's a good question. What happens if the volume is not ultra high? It tends to move sideways before it moves up, so you probably will see a test. Bag holding ideally should be very, very massive volume, but you do see them on just, sometimes you get an average volume one, and I don't really trade those. For me, bag holding has to have ultra high volume. If you see it on average volume, you do get them. I wouldn't trade it. I'd look for the ones that the best opportunities to make money on. The higher the volume, the narrower the spread, closing in the middle, that's bag holding. If you just take 2 signals out of this whole weekend, if you forget everything else, I hope you don't, and then you use the Weiss wave afterwards to confirm where in the trend after, because it will move. When you see those 2 signals, the price will move dramatically. Even on a 5-minute chart, when you see a bag holding signal on the S&P, and I've seen them, and it will move the market 2 or 3 points in your favor, even on a 5-minute chart. Hopefully, David and I will see that on Tuesday. And Steve, you're going to join us Tuesday as well, yeah, and Gary will join us. So we'll look at those, and we'll try and find them for you. And here we see the result. BP went up to nearly it did $46.20 from its low of 26. It nearly doubled in value. Again, that's what happened. Forget the news. That is exactly what happened. And this is the best bit. Someone said to me, how do we know when we find support levels? Regardless of the news, look at the support at the same price level going back not once, not twice, but like all the way back here, back to 2003, even 2002. There's no accidents in the market. Professionals have used every opportunity to buy that stock lower. Now, do I think we're going to come back down a little bit near that level shortly? We won't get to 25, I don't think, but we might, and if we do, that's a great place to buy, and it pays a good dividend again. Yeah. Does everyone understand what I'm showing you here? Because this is important. And then, Gary, what we'll do is we'll bring up now the charts using Weiss wave. This is going to take us a couple of minutes. So what I'm going to suggest we do, let's take a 5-minute break, a quick break, go and walk around and freshen up, because it's, I know the last session is always a tiring session. Let's have a coffee or something. Let's come back in 5 minutes. Let's make it 4:05 p.m. here on this clock, and we will set up the Weiss Wave on Gary's computer, and we'll show you exactly how that works. I'm not going to go through these charts. You've got them in your book, because I want to show you something that I think, which you will not have the charts we're about to show you in your book at the moment, I'm afraid. But I'll take some screenshots at some point and get those over to you. Okay, we're back with you here in 5. Alrighty, okay, we should be able to see. Let me just check. You may have to just mute that. Where's your sound mute? Okay, that should work. Alright, let's just do a quick sound check. How do we get rid of that? Okay. Right, let's just do a quick sound check for the internet, please. Testing 1, 2, 3. We've just swapped over computers, so you should be able to see a chart of gold with Weiss wave and a no demand bar. Excellent. Okay, good. All right. Ready, everyone? Let's get going. We've got 20 minutes to go. Don't worry, we'll use this. Yep. Okay, we're just... everyone's getting a bit tired here now. All right, so Dr. Gary and I are now going to show you how the Weiss wave works, and there's a beautiful example on this chart right here, in fact, on the weekly chart of gold. Now we can see, and Gary will talk to you about the wave count here, but we have a large wave up, but this is the signal I've just highlighted. Now this is a very good example of how VSA is actually showing us why gold was weak, and this was actually when would that have been, Gary? That would have been back in April, mid-April. And I've been forecasting gold to come down back down to that 1555 level. And what we can do in TradeStation, we have a slightly different way of showing the signals. Instead of being triangular, they're circular, as you can see. So they're red, circular. And they're exactly the same indicators by number. But remember, the data is going to be very slightly different from the way it's delivered with TradeGuider. It doesn't usually affect the signal at all, but I have had people tell me, oh, I saw a TradeGuider chart and you had no demand, I didn't. And it could be a tick of data could make the difference. But here is definitely no demand on the weekly chart of gold. Now let's have a quick look at what's happening here. Well, first of all, on the daily chart, we can clearly see, and in fact, Gary, is there any way I can bring up sort of a couple of hundred bars there just to go back? Yep. Right the way back there. There we go. Okay, perfect. Excellent. So I'm just going to show you now basically what happens when we look at daily and weekly charts. Because here is the weekly chart, and we can see a lot of weakness there back towards the end of April, middle of April here. And we begin our downtrend on the daily chart actually a lot before. But notice this gotcha bar that comes in on the daily chart. And it's followed here by a very, very nice. Now, when you're in TradeStation, you need to click on the Analysis Commentary button there to get your indicator. If you left-click, there's another no demand bar. Look. So do you notice how not only is the wave count showing us a change in behavior in the market here, but now VSA is giving us multiple confirmations on a daily and weekly chart. Now, the diamond trending system in TradeGuider is defined by these little crosses. And again, you'll see, you know, if you missed this on the daily chart, the weekly chart gives you 3 red diamonds saying you should be short gold. So what you're seeing here is the change of behavior from an uptrend to a downtrend. We are trending back down to actually a triggered number. We've come right the way down much further. And we see now here where the wave count, I'll bring Gary in a second to explain to you how the wave count works. But we've just pulled these charts up literally in the last 20 minutes. I mean, you brought them back in earlier. So I've not seen this before. I've seen the wave count in other charts, but not on gold. That's a superb chart, Gary. Talk us through what you see there with the waves.
Well, I'm going to coordinate them, make sure that they are. That's February 22nd or 24th, and that's February 24th. Okay, so what we see here is that we're starting off from the low here. Now we're on a weekly chart. This is the beginning of January. We rally up into February, and on nice wave volume. You see that nice wave volume coming up. And we have good movement coming up too. But we're also over here at supply. We saw that as a area where the market turned. We don't see much supply here on this down wave, which was only 1 week. But the next 2 weeks are very telling. We come up, we get a no demand on the TradeGuider software, the VSA software, and look at the wave volume here compared to over here. Remember, we're always comparing back and forth, compare and contrast. And when we go to the daily, we can see those narrow spread bars, right? Those narrow spread up bars saying that there's no real oomph to the upside. There's no fuel to the upside. Now, hard to predict that you're going to get one of these, what do you call them, gotcha bars? But if you're aware of this and aware that on the last week here, we said this is the week of the 24th and this is the next day, the next week here, look at that. Very, very low volume there.
Can I just quickly ask you a question again? You mentioned this might be hard to predict. Actually, I went on YouTube. It wasn't. I'll show you why. Could you pull the chart up going back to August, September time, preferably sort of September on the weekly?
Yep.
So we're going to go back to last year. 11, yeah.
August, you said.
2011, yeah.
Right here. Right in here. That's
it up there. It's further up. That's it.
Okay,
right,
September, October.
Where we get the big surge in volume. No, actually, we're in the wrong year. That's 2010. We want 2011.
I'm sorry.
I recognise the chart, and I.
There we go. That's it, right there.
That's what we see. Okay, so I'm going to hand back to you in a second. So don't go. So here, what do we notice about the volume at this area at 1900? Now, the closing price of this bar here. This is a climactic bar, and we notice here. Here is the first point of distribution around 1700, going back to August. Okay, there's hidden selling. Now, how do I know that's the first point of distribution? You can see supply has begun to enter the market. Supply enters on up bars. Notice the price it's at, 1700. So we've got our first point that I projected out when I did my YouTube video. We're back there, and we went straight back off it and bounced straight off there. So it's a great resistance line. Then, so notice this bar here. Oh, I've got to put the analysis thing on, haven't I? So I'm not familiar with TradeStation as much as I'd like to be, but here it is. Now, this is my favourite signal in TradeGuide. In fact, it was the whole reason for doing the YouTube call on gold was that signal. That was confirmed on the monthly chart a few days later, and it's the start of one of my sequences that's in my second book. But I projected those areas out into the future and have been able to take some wonderful short trades off these levels. Because, I've actually, Steve and I were trading a few days ago, weren't we? Was it last week or the week before? And gold hit one of those levels and bounced off like a rubber ball. So let me just ask a question of all of you. Do you all understand the importance of the background now? Yes or no? Put your hand up if you think that's, yes, I've got it. I know you're all tired. Everyone, you should see everyone's faces. They're like, oh, can we take any more of this? No, come on. The good news is we've got 10 minutes left, and then you can all get out and go down the pub. But, by the way, if anyone wants to join me afterwards, there's a lovely bar just down the road. I will buy you anything you want, coffee, tea, whatever. It'll be on TradeGuide. You're very welcome to join us. Gary usually at this point gets about 5 bottles of gin and tonic out and finishes those. So the buying climax comes in. And when we see that, I'm looking for a change in behavior in the market. Okay, and here, that one there. And then that one there was another sign of weakness. And then here is the telltale. Sorry, I have to keep changing this. No demand at the buying climax. At night. It never went above that level of 1900, by the way, where the selling happened. But the news here was so funny. I keep my scrapbook. Everyone's buying gold, apparently. It was a herd stampede to get into gold. My father-in-law rang me and said he was going to go and buy some gold. Could I look at the chart? And when I said, tell him everyone's selling, he actually didn't believe me. He didn't believe me. He knows that I'm a good trader. He said, you know, even he's known me for 10 years, and even he was saying, there's no way, because people are so influenced by what they see and hear in the media. But I could see on the chart that there's no way professional money are buying gold because they've bought it much lower. This is a wonderful opportunity for profit taking. I mean, wouldn't you? If you hold gold trend contracts from 1300 or 1200 and you brought a lot of gold, wouldn't you want to get the hell out of it and make some profit when everyone's going to buy from you? David, we're looking at the Weiss wave with TradeGuide right now, and it's unbelievable. Now, explain the wave count here as well. No, actually, it's fine. David's pretty slim. Yeah, Gary's doing a very good job. You want to show us the wave count on that as well?
Well, what Gavin's doing here is a very useful thing. He's coordinating the weekly chart with the daily chart, and then support and resist. Well, in fact, in this case, resistance, longer-term resistance. Okay. Then we come in with David's wave chart into that date, into that week, and we see a lack of demand up there. Just no question about it. No question about it. We see.
Can everyone see that? Can everyone see that? Just ask the internet. Can you all see that? Can they see that?
Yeah. Can you see that on the internet? The lack of demand at that point in the wave structure, and then you also get a weekly no demand as well. See if I can do this. Yep, no demand on a weekly basis. So it all coordinates very nicely. Very beautiful, really very beautiful. Very powerful stuff. Very powerful stuff.
Let's look at the E-mini to finish off with here. And actually we'll look at JP Morgan quickly as well. You can close that down. That's why it won't do anything. You have to close that down first. Okay. So I mentioned earlier that I think JP Morgan might be a good stock to start watching. And we can see here, notice the volume coming in down here. Now, when I click on these indicators, you're going to see what's going on. I can't get used to this, but there we go. We'll go to...
It's just a matter of what you're used to.
It's grayed out now. Oh, okay. There we go. So the weekly chart here, view, analysis commentary. Here we go. Okay. So what do we notice here? Yeah. Climactic action. Now, this was the week that the news came out. It's at a key area at 30. Now I know the signal that I'm looking for right now in the next 4 weeks. Can anyone tell me what the signal I'm looking for in the next 4 weeks is? No supply. No demand, remember, is a weak signal. Hold on a minute. You're supposed to be working for Trade Guider. You're fired. Ken has been working for us for an hour. He got the wrong answer. No supply at this level, guys and girls, is going to be a great level to start looking at this stock. But again, what do we notice about the wave count and the behavior on the daily chart? It's actually still at the moment, oops, here, looking a little bit weak. I think they may mark this down a bit further, but if the parent index starts to rally, then what I'm going to look for is for the market to penetrate 38. That's my safest entry. Now, I may go in sooner, but if it goes above 38, that'll take about 5 or 6 weeks, possibly longer. If the parent starts to go, then this stock, which is a laggard at the moment, it's actually acting weaker than the index. This stock has been picked up as acting weaker than the index. So I don't want to buy it yet, but I can definitely see someone's interested in it. Can you all see that? Can everyone see what I'm talking about here? Yeah? Any questions on what I've shown you on JP Morgan here? Is there any questions? Okay, I'm going to hand over to Gary for that.
Let's just go back on the weekly just a little bit here. Yeah, kind of what I thought. We're getting sizable volume here, which suggests climactic action. And that's what you're seeing in the VSA signals right in here as well. Now, that's on the weekly chart, right? Now, on the daily chart, it's interesting. We come down, good, solid volume to the downside in the Weiss wave. We rally up, not much oomph behind this, not much fuel behind the market. But look at what happens as we come back down. Do we have much selling volume in here? No, it's dried up, right? So it's signaling to us that we might potentially see the no supply coming in. And this is also technically a spring, not one that I would necessarily think about taking at this point, because we can come back down one more time and see that shortening of the thrust in both in the wave structure. And when we do come back down to see that, we'll see light volume as well, assuming that supply is completely dried up.
Good example. I'll give just one more. Let's have a look at the S&P if we can. And we'll finish on this. Almost dead on time. Look at that, 4:30. Marvellous. Okay, so what do we notice then about, first of all, the daily chart? We can see here, we've got a nice signal down here, as we can see. Let me just put that on. Actually, got to put that view analysis commentary. There it is. Okay, so they've come down and tested a prior low, basically, or a prior support level. And there is a lot of support down there, isn't there, Steve? I think you were mentioning that in your room. So the daily chart definitely confirms that there's support down there, and in fact, as we can see, it's popped up a little up to this 1322 area. Now, if we look at the 5-minute chart, can we move back a little bit further with that one? I mean, just want to show the trade that I took on. That's it. That's the one. That's it right here. Here it is. Now, I'll get Gary to talk about the wave count here. Do you all agree on the 5-minute E-mini we're in an uptrend, yes or no? Yeah. We're not in an uptrend as it happens on the daily, but we did have a last signal is a sign of strength, and the market did start to rally away from it. And actually, I use the following time frames to trade the E-mini. The 5-minute, the 15-minute, and the 60-minute, and those are key, although I do use the 3-minute sometimes when it's moving very fast. And then here, we see a classic example of a setup, and it meets, if you've read certainly my book, you'll know why that meets all the criteria to go long. And it was at 13.50, I think, was where I went in. That is in effect a test in a rising market because the market is rallying. Now I'll get Gary to talk about the wave count here. The bars are blue, these little diamonds are green, and you can see as we pull back here, the volume declines quite rapidly. There's healthy volume, but not excessive volume to the upside. It wasn't too bad, but it was immediately tested in the next bar close level. And then we see a very nice push up. In fact, I think it closed at 13.23, did it? It was about a 5-point trade on a 5. Yeah. Yeah. So sorry, it closed at 13.18, I think it was, something like that. 13.22. That was the close. So there was. So now, just to wrap up, before I do a summary, let's hand over to Gary, who'll show you how the wave count there confirms the VSA.
So we'll just take a quick look here. This is Friday's market. So let's just see what Thursday's low was. 1305 and a half. I'm sorry, 1305 and a quarter. Okay. Notice where he took his trade in here. We had rallied up above yesterday's low. If we've gone up above yesterday's low, where are we going to go and try to test? A good shot would be yesterday's high. Exactly. Always looking at those lows and highs. And this is particularly useful here on Friday because we dipped underneath Thursday's low, held down there, and then rallied up above it. And so then as we do, you can see on the Weiss wave, rallies up produce nice volume to the upside. And then we pull back. We get a little volume in here, but notice we don't go down. We hold the gains. We're holding our gains. So this is effort to go down and not much result for the sellers. Okay? And so Gavin's got a nice little test in here and holds it into the close, and it's a nice little trade, no question about it. Well, I've just got that set up on the 5-minute chart, and this is a daily chart. On the bottom as it goes up. Which chart now are we talking about? Yes. Okay. Mm-hmm. Right. The question is here from inside, we have a big pullback from into this level with not a big pullback, but a pullback with good volume, and then the market just goes sideways, and then there's no volume there. What's the story with that? It's just the character of the movement. It's just going sideways here. There's no up or down. There's no neither the bears nor the bulls are trying to push the market at that point.
A little bit of supply hit there, which is probably what knocked it sideways.
Yeah.
But it was so bullish at that point, it was going to go up another leg that the test held and then it went up.
Yep.
And there's another signal right there before, if you want to look at that.
Mm-hmm.
Right here. There you go. That was the one.
Yep.
That's one. If you click on the view and the, that's it, in the commentary, you'll see there's another entry right there. And again, the stops go right underneath. Another Tesla. Oh, stopping volume that time.
Stopping volume.
Yeah, there it is, because the volume's higher.
Because the volume's a little higher relative to everything else. But look at the price bars in here on this 5-minute chart. Right? They're wider going up, and as they pull back, they're narrower spread, and the wave volume is lighter, just showing that there's no real supply in this market.
Yeah.
Giving you good heads up all the way through.
Can that movement be anticipated? Well, yeah, because you're looking at, of course it can. Look at the trend of price when you're at. Absolutely. It's in an uptrend. So there's no serious sign of weakness. And actually, if you look in the, if you follow the rules are quite simple. If the diamonds are green, the bars are blue, and you have a pullback on light volume, it's a sign of strength. I mean, I don't know how simpler I can make it. And we're looking for pullbacks in an uptrend. And in the morning, by the way, it was marked down, and there was a big shakeout there. It's all there. Everything we've taught you this weekend is in those charts, and I could pull up dozens more because they'll be there next week and the following week and the following week. This is how the market works. We'll have a look at that in a minute if we need to. Yeah, absolutely. Yeah, I want to wrap this up because we've got to be out of here, I think, at about 4:45. So, right, let's. I think we're at the end. Now, can you give everyone the exam papers that we gave out for the next 2 hours? No, don't worry. You haven't got any exams. I hope, though, that you'll do what I've done. I mean, I've been to so many seminars, and what tends to happen, for a few days afterwards, I'm all excited. I do my studies and that, and then I tend to forget the following week. Don't do it with this seminar. I was asked earlier, how are we going to follow this? Well, we're going to go to London and do this. And we're going to do this, and Gary Dayton is coming. I'm very hopeful David can get there, but we've got to get him a passport. So I'm going to speak to Mr. Obama tomorrow, see if we can expedite that, speak to the president. Anyway, let's summarise what we've learned. I mean, I'm not even going to try and summarise it because it's too much. But we have definitely, I think, achieved, I hope anyway, you can tell me, I hope we've achieved our objective of teaching you to read the tape and read the volume. And I hope that that has been achieved. And again, we'll send you a form, a survey form to fill out. So, we always want to improve. We try our best. I will say, I think the venue here, I want to thank Maggiano's officially because they have done a super job. And we've been well looked after. We had a bit of a scare the first morning when the room that I'd booked had a fire alarm going off. There's nothing worse when you organise an event, people are arriving, the fire alarm's going off, and all your kit's all set up, ready to go, you're prepared, and then it all hell breaks loose. But sometimes that's a good sign. You know it's going to be good. And then, of course, the taxi drivers returned David's laptop, and, I mean, great. Oh, good. Yeah, we'll do this. I think this is probably a venue we'll keep for the future. It is a good venue, and Jack was just saying it's right downtown by the trains. So, and it has Frank Sinatra. Exactly. We have music. The only downside to it was we did have a band next door for an hour yesterday, which I apologise, but we got away with it. So let me wrap up by, first of all, I want to certainly thank all of you who've come here. You guys and girls out there. People here have come from far and wide. Hawaii, Hong Kong, Houston, Texas, all over the place. We've had a great, all ages. That's right. And obviously on the internet, we actually filled our seats. We sold out our places. So great to have all of you here. You guys on the internet, I hope you've enjoyed it. I think we've managed to get a good quality recording. I think the beginning's a bit patchy, but that we can fix. And overall, we will ask for your feedback. I'm glad that we can do this over the internet and do it live. It makes it more special, really, because you're connecting all over the world. So, first of all, I want to thank, and a big round of applause, please, for Steve Phillips, one of our educators, who I think did a great job. First time I've worked with Steve, and obviously not the last. Brilliant presenter, really, really added to what we talked about. I needed someone to back me up on the VSA side. Steve, you did a great job, mate. Thank you. Super, super job. And then, of course, Dr. Gary, the man himself, who's coming to England to experience the British pub, which There's plenty of them I know in Worthing where Tom lives, so just be ready. You are in trouble. But would you all give a warm round of applause for Dr. Gary Dayton, who has been great. And then the two legends, and I mean that in all sincerity, David Weiss and Tom Williams, and I'll talk about David first because Tom's not here. David decided not to tell the joke, which is a great shame. But I can understand. Don't worry, I'll tell it next week in one of our webinars on Tuesday. So if you're there Tuesday, we'll tell you the joke. But I will say this. When you're around really experienced people who not only have a passion for what they do and teach, but have massive knowledge that's been gained over many, many years, but also you can have a lot of fun with the people, you can enjoy their company, they're genuine people, you know. And Tom Williams is exactly the same as David. If you put, unfortunately, they've never met, but I'm trying to make that happen. But both individuals have the same, I think, the same thought process about the market and see it in a slightly different way, but have brought to the worldwide attention, really, how Wyckoff, who we're all connected to, a trader over 130 years ago who's as important today as he was then. And for me to be able to bring these great guys together in one event, and I hope to do it in the future, has been a very momentous moment for Trade Guider. So, David, I just want to say thank you very much indeed. You've been absolutely superb. I think you're probably a 35-year-old there because running around. He went to the Lodge in Chicago last night, which is a famous bar. I'm not supposed to tell you this. There's a reason the Lodge has a reputation, but David apparently walked in, was immediately surrounded by young women. Your wife will never hear this, I promise you. No, David's a great guy. I'm only joking. We had a great time, and my business partner Richard said he has never met an American that's as funny as David Weiss. That's an honour. So, and then, as I say, I hope everyone who's here. Obviously, Tom Williams will be listening to this. I personally want to thank Tom for everything that he's actually done, not just for me personally, but for Trade Guider as a company. I'm blessed to know what he knows, and I do feel a responsibility to take this methodology further, and I'm doing so both institutionally and for the public. But I was asked the other day, Gavin, are you now going to basically switch off VSA to the public and just go and trade a hedge fund? Because that's pretty much what people are thinking. The answer is absolutely not. I have a promise to Tom that I would never, ever keep this information for myself and for a few greedy people, and that's not what I'm here for. Money is important, but what's more important is to help each other, whatever we can do. When I joined the police force all those years ago, it's because I had a passion to try and help others. I didn't really feel that way as I began to throw people into a police van. It didn't feel like I was helping them at the time and hitting them in a truncheon. But anyway, so I got out of that particular profession fairly quickly. But this profession, I have to say, is extremely rewarding because we can all go away and understand we all have the power to take on the market in its own game and beat it. Just like Richard Ney said, just like Wyckoff has said. With the right tools, with the right discipline, with the right belief system, most importantly, really, I think it's knowing that you have the right to have as much money as you want, but you better believe you can get it. And then what I say, I call it the law of attraction, attract it. And a market is one of the most difficult places to attract money, and yet more money is made in the markets every day and lost than any other profession. That's why it's exciting. So on behalf of Trade Guider and everyone and the team, thank you very much. God bless. Have a lovely weekend. It's gone. See you next time. Bye. Oh, and just quickly, our event on Tuesday, we will email you all, and also you're going to get an email tomorrow with a copy of Tom's newsletter. That he wants you all to have a copy of his newsletter. It's a very interesting newsletter as well. You already get David, but we'll put David's in as well when you do your next newsletter because you're going to be around. I think when you're going to do your next newsletter, Thursday. So if you want to subscribe, or just David, if you join the VSA Club, David's newsletter we send out as soon as we get them. Thanks everyone. Any questions or anything from the internet? Or are we all good? Good. Time to go to the bar. Thanks, everyone. Take care, and we'll get the recordings up shortly. Bye-bye. Yep. It's a wrap. Yeah, if you could...